Hello and welcome to Morning Trade with Moneycontrol. I'm Sumaira Abdi and I'm here to help you navigate your trading day with actionable trading strategies, sectoral trends, and most importantly, your queries answered live during the course of the show. So guys, keep commenting on our live feed and we'll have your queries taken up with our guests during the show. But before that, let's see what the global handover looks like this morning. In the U.S., Wall Street has ended Friday's trading session sharply higher. The Dow Jones has gained over 1%. The S&P 500 surged over 1.5%. And the Nasdaq composite, the day's outperformer, closed with gains of over 2%. But stock futures were flat Sunday night as Wall Street now looks ahead to key consumer price inflation data, which will be released tomorrow. This report is one of the last pieces of data on inflation that the Fed will see ahead of its September meeting. Also, retail sales and industrial production reports will be released on Thursday. Meanwhile, European markets have closed higher on Friday as investors have reacted to that record rate hike by the European Central Bank and also further comments from the Fed Reserve Chair Jerome Powell. Stoxx 600 ended with gains of 0.2% and the majority of sectors and all major bourses in Europe are in the black. Meanwhile, shares in the Asia-Pacific region this morning are higher on improved risk sentiment. The Shanghai index is up 0.8%. However, the SGX Nifty indicates a muted start for our own market near the 17,830 mark. Stocks in the spotlight today. We have Interglobe Aviation, Hatsun, Agro, Syngene International and Astral. We'll also explore the key reasons possible for the pharma sector's underperformance. But first up, let's get the discussion going and talk about the stocks which are going to be in the spotlight. Shivangi Sarda of Motilal Oswal Financial Services joins in. Hi Shivangi, morning. Thanks very much for joining in. The first stock that I want to focus today on is actually Reliance. Fundamentally the news is that there is a near 1,600 crore rupee acquisition that has taken place. But technically, how does this stock look positioned?
Good morning, Sumaira. Thanks for having me. Looking at the chart structure of Reliance, we saw a very, bearish candle on Friday, which indicates some sort of a pause in the positive momentum. And we could see some sort of decline and, consolidation in this stock. On weekly frame itself, it has taken a little bit of a pause and it is making lower highs, which is indicating that upside is restricted over here.
Okay, fair enough. Interglobe Aviation, I don't know any expert who actually recommends a lot of these aviation stocks for retail investors particularly. But for Interglobe, given that there is also some funder news, do you see any upside here?
So, Interglobe made a, very small candle, small green candle, and then it saw a little upside over here. The good part is that the volumes were very high when, the stock was turning from its lower zones. So some sort of buying interest can be seen at lower zones, but again, follow-up buying is required above 980 levels for the stock to move upwards. So 980 would be a good level. 1980 would be a good level to watch out for the upside for this stock.
Okay, Tata Consumer is the other one. This morning report suggests that they're probably on the prowl for an acquisition, possibly Bisleri, and that they may have already reached out to them. So therefore, possibly there will be movement on the stock today. What are the levels you see here?
So, Tata Consumer, if we look at the weekly chart structure, it is quite positive, but daily it has taken a little bit of a pause. So, overall structure is quite positive and a little bit of momentum here would take the stock higher. I feel that immediately we would see 845 levels, which is the resistance, the first resistance of this stock. So, this is the level we could watch out for, and below we could watch for 806 levels, which will act as a support.
Okay, what about HG Infra? There is news of project completion, but, the stock hasn't shown much movement. Technically, how does it look positioned to you? Do you see any upside here?
So, looking at this chart structure, it is, somewhat, it could not sustain at higher zones. Weekly, it did come out of its range and it gave a consolidation, sort of a breakout, but it could not sustain at higher zones. So there is some sort of, resilience over here at 636 levels. So, once the stock crosses this level, it would be a buy from here.
Okay. Another stock in focus is Trident. Here, the business update has come for August, and it's looking quite decent. What are the targets that you have for Trident?
So Trident, again, it has a very similar chart structure to the previous stock. Weekly it did come out of a consolidation, but it could not hold. On daily frame, we are seeing a little bit of a narrow range, and then an upside from here. But again, 40 above 40, it's a buy, or else the lower levels to watch out for will be 39.
Okay. IRB Infra is another stock. There is some fundamental news flow as well. But is this a stock you track, and what is the upside here?
So this stock is quite interesting because, even the previous times we've seen that once it comes out of consolidation, it gives a quite a good up move for 2 to 3 sessions. So right now it is trapped in a consolidation, and, it is just waiting to come out. So overall, if you look at the weekly chart structure, it has negated its lower highs, lower lows formation. So it looks quite positive. And, the first level which I am looking at is 250 zones over here.
Okay, can you chart out the pattern for Ongc as well? Where do you see it headed?
So Ongc, if we look at the chart, it did perform really well on a week-on-week basis if we see from July. But then again, the start of September saw a little bit of a pause and in the positive momentum. So this stock might go into some consolidation. It is quite positive, but it is range bound to positive. So not much of a momentum would be seen over here.
All right, Shivangi, do stay on. We're going to come back to you in just a bit. For now, let's also go across to Gaurang Shah of Geojit Financial Services, who joins in. Hi, Gaurang. Thanks very much for joining in, and good morning to you. The first thing I want to focus is on some macro data, because I know you track it keenly. In the US, of course, we are waiting for their, inflation data to come out. But for our own market as well, we are expecting inflation data coming out this week. How do you see the headline index moving? I mean, what is the expectation on the macro front, and how might the market look at it?
Thank you, Sumira, and morning to you. It's a pleasure to be on your show. So I think if I have to just reflect and spin back in time for the last 4 months data as far as inflation is concerned, I think it's very encouraging, and I think the last number that we saw on that front was lower. So for the last 3 to 4 months, we are heading down south as far as the inflation number is concerned. Elsewhere in the world, as we all know, there are problems. Hands are full, and you have inflation at 40 or 41 year high, and they don't seem to be cooling off anytime sooner. And that's why our sense at Geojit, Sumira, is that, the central bank and the chiefs of the central bank will need to take extraordinary steps and think out of the box to rein in this inflation and do whatever is necessary to get back to the growth trajectory. Even if you have to look at the GDP number and where we are, the recent GDP number, Sumira, I think we are doing much better, in the sense we are in a much better shape and place than some part of this world, or maybe some developed markets. On the markets, your question, I think immediately in the short to medium term, if you ask me, Sumira, the lower side floor lies at 17,200, 300. And on the higher level, the top heavy feeling, as we call it, or resistance, as you may call it, lies at somewhere close to about 17,600, 17,800. So broadly, I think you will possibly oscillate, and the levels where we are right now, Sumira, are a little bit top heavy. So you might see a little bit of profit booking, a little bit of lower levels, consolidation, if you will, and then possibly, take cues from the local and global front and move forward. But what we've been advising our clients is to look at all opportunities of buying a sub 17,500 and closer to 17,300 from a long-term point of view. And my sense is that if not now, then maybe in the matter of time, I think we have stayed relatively better off, and we can possibly move much, much higher and in better levels on the higher side as far as the emerging market is concerned. So I think this market, our markets are all buy on dips kind of market.
Okay, fair enough. But this large cap trade is getting pretty crowded, right? I mean, all big portfolios are sort of positioned in a large cap, highly weighted sort of a portfolio. So therefore, where is the opportunity? I mean, look at the mid-cap index, right? It's been rising for the last, 12 weeks now. Last week itself up 2%. What is the opportunity in the broader markets? Is this also a time to be looking at mid-caps and small caps?
So small caps, you really need to look through the magnifying glass, Sumera, because if you go and look on the fundamental side as far as small cap universe is concerned, I think there is a lot to do as far as, earnings catch up is concerned. And you still have some, pain as far as earnings visibility in the small cap universe. What we've been recommending is firstly look at large cap and then selectively, depending upon some sectors, look at mid cap. So if to answer your question, Sumera, I think large cap banking NBFCs look extremely strong. Earning visibility is absolutely clear. And I think private sector banks will continue to outperform public sector banks. But there is visible improvement in public sector banks as well. So you have names like ICICI Bank, Axis Bank and Kotak Bank, along with HDFC Bank in the large cap private banks universe. State Bank of India and Bank of Baroda would be the choice in public sector banks. NBFC, Sumera, I think both banking and NBFCs will see tremendous amount of improvement as far as net interest incomes and margins are concerned on fallback of a demand of credit growth that we have foreseen. And I think that will grow quite well. And equally is strong in terms of repayment of principal and interest. So you have everything going good as far as banking and NBFC is concerned, despite the fact that you have rising interest rates in India as well, but we are relatively better off. IT is a contrarian call, Sumera. I think a lot of people are advising to stay away from IT, but we at Jujut believe the valuation are attractive. Pain is there, no denying, short to medium term. But long term, I think if you have to go by the commentary, I think there is significant improvement coming in IT as well. So TCS and Tech Mahindra, along with Mindtree and L&T Technologies would be, FMCG is something that we are extremely positive, and autos. So these are broad pockets I think one should libel into. And as far as mid-cap universe is concerned, I think FMCG, mid-cap IT, mid-cap private sector banks, and mid-cap possibly cement and metal names. I think this is where you should possibly look at as far as the mid-cap universe is concerned.
All right, fair enough. But, I was quite surprised when late last week we had the mutual fund flows data coming in. And for equity funds, we're actually seeing a big drop in flows. So, I just wonder what is it that whether retail investors are going to miss the bus one more time? Because, every time there's volatility, it looks like there's some sort of a sentimental rub-off. But anyway, let's focus on one more sector, which is pharma, because I didn't hear you mention it at all. And, one would have assumed that given the ongoing concerns around health and wellness, that this is a sector which could continue to do well, right? One of those all-weather, but it hasn't. I mean, this year itself, it has been one of the big underperformers. What's your take on pharma? And, I mean, what do you like in this space, if at all?
So, Sumera, I think you are not going to see the kind of performance that you saw as far as the pharma sector is concerned. Just when you had the good news on the vaccine front, in effect, what I'm trying to say is the rally that we saw maybe about a year and a half, two back in the pharma universe, I don't think that's going to come back anytime sooner, unless and until you have some significant, negative news flow on the health front as far as the global arena is concerned, which will even spook us equally bad. But if you ask me, what would be the names that I would look at in the pharma universe? Primarily 4 names. There are about 6 or 8 names that we have buy coverage on the fundamental side. But if I have to select top 4, then that would be Cipla, Dr. Reddy's, Divi's Laboratories, and Sun Pharma. I think you need to focus within the manufacturing side as far as the pharma universe is concerned with healthcare. Then these are the 4 names. If you want to look at services side, that is healthcare, then I think Apollo Hospital is something that I would definitely look at. And one more sector which I missed out when in our earlier discussion, as far as sectorial picks, defense is something that we are extremely positive. And I think Hindustan Aeronautics Limited, Bharat Dynamics Limited, BEL, all these companies we've been having coverage on HAL and Bharat Dynamics on the IPO front. On BEL, we have dedicated coverage on the fundamental side. And I think with the kind of restriction that the government has put in place as far as the third import list where defense are concerned, I think that gives a huge potential for domestic defense-related companies to come into action.
But Gaurav, what explains this lack of interest in pharma? Is it just that the trade is saturated, or that you don't expect maybe earnings, etc., to improve from here on? And is it just pharma? I mean, you mentioned Apollo Hospitals. What about the larger healthcare opportunity?
So I think diagnosis, if I have to again, drag diagnosis sector into the health or pharma universe, then Dr. Lal Path Labs. Problem, Sumaira, is that we've had one too many news flows on the negative side as far as the establishment inspection report is concerned, or Form 483 is concerned, or US FDA. I think this doesn't just seem to stop, and we've been having this, observations on the negative side from the regulators, both globally as well as domestically, is something that is something seriously upsets me to a great extent. Because if you are in the field of manufacturing medicines and drugs or injectables which are life-saving, and if you want to compete on the international level, then I think your manufacturing practices also have to be of those standards along with your workforce. You can't afford to have any loose corners over there. So what spooks the pharma sector is the on and off one too many news flows on the observations that comes through. And secondly, I think numbers. I think finally what derives the share price, Sumaira, is the numbers, the earnings. And if you fail on that front, then the market is going to punish you. And according to my understanding, I think over the last 2 quarters, pharma has not done anything great in terms of earning visibility. So I think that's one of the bigger reasons why pharma tends to be a little bit of an underperformer.
All right, Gaurang, thanks very much for explaining that to us, and I hope you have a good trading week. Thanks much for joining in. Okay, let's get back to Shivangi Sarda of Motilal Oswal Financial Services. She's still with us. And Shivangi, it's time to answer some of the queries that have come in on our live handle. We have viewers writing in to us. The first question comes from Vinay AG, and he wants to know about TTK Prestige. What's the call? I mean, this is a stock that has moved just about 3% this month. But, on a yearly basis, if you look at it, it's quite flat. So do you think it might continue this up move that we've seen this month?
So, looking at this chart structure, if we look at the monthly chart, it's been rising from the last 3 months continuously, and it's been quite positive with even the slight declines were being bought into. So overall the chart structure is quite positive, but the only concern is that it has formed a doji candle and then at the upside, so it might see some sort of a slight correction over here, and so any dips could be utilized as a buying opportunity.
Okay, the next query is on Ramkrishna Forgings. Kishore Borkar has written in to us. This is a stock which actually a lot of people like, and they're seeing some momentum also with new orders, etc. coming in. So Shivangi, what is your target on this stock?
So the chart structure is quite positive. Some sort of a slight pause can be seen, but the overall, if we look at the broader frame, it's quite positive. And immediately we can look at, 215, which is the first target, which we could look at immediately. And stop loss would be around 198.
Okay, the next question is on Ramco Systems, coming in from Bikram Khatri. This has been a severe underperformer this year, and possibly Vikram is stuck in the stock. Should he just bite the bullet now? What would you advise?
So this stock, it could not hold on to its momentum, and I feel there is very limited upside in this stock. So it's better to exit this stock and enter into good performing stocks.
Okay, so whatever the loss, Vikram, I guess it's better to exit now. TCS and Infosys, the large cap IT name, Sanjay Chaudhary has written in just now. Gaurang said that he's also given a contra call in IT. Would you agree that IT is a space to be looked at now, and within that, TCS and Infosys would stand out?
So, looking at the TCS entire, looking at the entire IT, space, it's been an underperformer since quite a long time. But if you ask me for a longer term perspective, then Infosys is a much better stock to, invest in. So here, the immediate target for Infosys for the long term would be around 1760, and we could see a quite good upside over here. But again, the IT pack has been an underperformer, so we should have a strict stop loss in place.
Okay, and finally, Rakesh Kumar wants to know what's your take on Bata India. It's one of those, nice consumer names. Do you see it moving higher from here?
So Bata and the entire FMCG pack, if we must say that, it has performed very well. Some sort of a consolidation can be seen over here because the focus had shifted to the banking space. But of course, overall, FMCG pack is quite positive, and, immediately we could look for 1960 levels in this stock.
Okay, and finally, we have one more query, that has just come in. Rohit Ghai wants to know about Concor. We have seen fundamental news here. The stock has moved higher. Can that momentum sustain?
So Concor just recently saw a price volume breakout, and it came out of its narrow range and trading at higher zones. But again, at this levels, it would be advised that we could do some sort of a profit booking. But of course, the stock is in quite positive, and some profit booking in some stocks could be held on to.
Okay, finally, Shivangi, what are the stocks that are on your radar this morning?
So on my radar, the first stock would be SBI. So the stock broke its previous resistance zones, and it is trading at its all-time high levels. With a price volume breakout seen over here, this looks quite positive, and a target price of 575 would be expected over here, with a stop loss of 542. My second pick would be Tech Mahindra. So it has formed a strong base, and it's given a breakout of its falling supply trend line on daily scale. And the bullish candle which it formed after managing to close above its 20 DEMA is quite positive, with follow-up buying seen here. So my target price here would be 1180 with a stop loss of 1100.
All right, Shivangi, thanks very much for joining in. Have a good trading session. And with that, we're going to wind up on this edition of Morning Trade. But don't go anywhere. Stay tuned. Markets with Santo and CJ comes up next.